A. Balasubramanian is CEO at Birla Sun Life. He's joining us out of our Mumbai studios. Bala, good morning. Great to have you with us here. Apologies to have kept you waiting, hitting you a little late. What did you make of the Infosys results, Bala? I mean, what is your team telling you?
Yeah, I think, Prashant, good morning to everyone. Of course, the results feedback which I just quickly gathered after the announcement of the results from the team is clearly something is positive for 2-3 reasons. One, of course, the confirmation of the pickup in the global economy. In some sense, actually, it continues to remain favorable for the IT as an industry. And second is 7-8% kind of guidance which has been given. It also makes people believe that we'll probably see, would have seen actually the worst of the results from the guidance expectations point of view. And third, again, is something actually is a lot of clarity that has come from so far from the numbers what they have delivered. Clearly, I think it is actually removes some of the uncertainty which otherwise most of the people actually used to think about in terms of what kind of guidance could come, what kind of margins could come, and what the kind of growth expectation that could come from the global the economy. And these are some of the positive feedback that is coming. And second, of course, important factor which I think was also being analyzed by my team is that most of the result that has been coming actually in the global economy, especially in the US and Europe, I think mostly in the US, there has been actually increased level of spending that is being noticed from the discretionary expenditures. I think last 2 years we have seen a significant slowdown with respect to the spending, because most of the time people what most of the business people do is to cut actually discretionary expenditure when the times are tough. But I think fortunately this year, given the fact that there has been a pickup in the global economy, which ultimately leads to actually the increase in profit, there seems to be actually a little bit of increased level of an estimates that is coming with respect to the discretionary spending. That also in some sense I think boosts the confidence towards these sectors. And Infosys being of course is the largest the market cap company and the leader, and I think the analyst community is quite happy even within ourselves as a portfolio managers.
So, you know, IT and pharma sectors have not fared badly. They're sitting on phenomenal gains over the last 2 years, but from the start of the year, relative to cyclicals like banks and metals and material stocks, they've lagged behind. As we get closer and closer to elections, and as Q4 will show us that Q4 will not be significantly better than Q3 for these sectors, right? Actually, Q4 could be worse for these so-called cyclicals. Will we see a shift back into sectors like IT and pharma? People sort of chasing those names once again, selling these names?
Yeah, I think it's a good observation, Prashant. I think one has to look at it from the point of view of how much is the overweight and underweight one has to be on any single sectors. And clearly, if we go by that concept, there is a period where there was a substantial need to be overweight with respect to the index weight in the ITS sectors. But there is a time where the most of the money was chasing actually into those companies which got a very high free cash flows, high ROE, and high dividend paying track record. At the same time, less uncertainty with respect to the earnings expectations. Now that we have seen actually some bit of sentiment is coming back towards the economic growth recovery path, purely on the basis of certain expectation that is being set in post general election outcome in the month of June. What are the things potentially could happen for India with respect to reviving the investment demand of the country? If that's an expectation which is gets built in, so there of course there is definitely need actually for tweaking the portfolio so as to have some exposure to some of the other sectors which could have some bit of overweight position or maybe come to even a neutral weight positions with respect to the index. Having said that, the question of rather playing the sectors with respect to the pharma and Infosys being the fundamentally sound business model, one cannot of course ignore that segment, though they may underperform in the short term, but the longer term outlook for these companies continues to remain very, very strong. And the question is how much is underweight and overweight one need to have. And clearly I think if one looks at the current portfolio positioning, I think most of the portfolio managers including ourselves would have come to actually either the neutral weight or the marginal underweight just to accommodate some bit of expectation that is getting built up in the portfolio by reflecting in terms of owning some of the stocks coming in the non-IT and pharma space. And that's the way I think the portfolio is being built. Having said that, ultimately what has been playing out quite well for the last many years, I think it will even going forward will remain. I think the business and the way I think the balance sheet is being run, and the way the company is positioned actually to participate in not just only in the domestic growth, even the global growth. I think one had to look at it in totality, how the portfolio have to be positioned. Having said that, I think the as you rightly mentioned that this year since beginning the sector has underperformed is also something to do with the expectation that is getting built as far as the rupee dollar movement concerns. And we have seen actually the high amount of pressure in the month of September, where rupee was expected to get touch 70, and a lot of expectations are getting built up, and thanks to of course the move that came from the central bankers and also the kind of money that has come into the country, the large proportion of the fear that has now gone away. With the improved direction that we are seeing with respect to the current account deficits as well as the balance of payment, I think as long as the rupee dollar remains somewhat stable with not much of volatility, that is what we have seen in the recent past, I am sure the sector earnings may not get impacted. As long as the uncertainty doesn't come actually with respect to sector earnings, probably the sector could probably a neutral performer.
Bala, any thoughts on the opinion poll which we put out? I mean, the only poll so far which gives the NDA 272 plus. Any thoughts?
Yeah, true. Though I am not a political expert or somebody an expert who can comment on this, but clearly I think the sentiment towards a single party getting the larger seats, that I think that's becoming increasingly the expectation of the market. I think the today's number of your TV reporting 272 seats coming for this one single party alliance, I think it's somewhat good news if it turns out to be really good, more from the point of view of getting the direction right, both from the economic point of view as well as the expectation that all of us have been building up, that India as a country I think should do far better than what we have done in the last 4 or 5 years, given the high potential both from the point of view of consumption's demand that remains for longer term, and secondly the kind of high potential that India has offers today, both for domestic investors as well as global investors with respect to the investment related opportunities. And these two things have to get materialized, and these two things have to of course have to be driven in a powerful manner with the right amount of policies from the stable government. I mean, that's why I think if it really comes out well, I'm sure the domestic the investors as well as the global investors would look at it more positively from the point of view of creating some bit of an expectation from the Indian economy over next 3 to 4 years period.
Bala, you know the disconnect, if you look at IIP numbers which were put out, I know the argument is it's just 1 month, and but there's a disconnect between sentiment. The sentiment is that, well, political change is good, the opinion poll, the directions that they're pointing to is good, so that will take care of a lot of problems. But it's easier said than done. You know this better. I mean, you've seen cycles and both in the economy and the market. While one can say that the new government, irrespective of who comes, will have a very low starting point in terms of growth, right? So it may actually do better. But aren't people building in too much about how fast and how well things will turn out to be? How fast, I think, crucially?
I think it's a good observation, Prashant. I think the market generally has got the tendency to reflect the sentiment much ahead of the actual event happens. It's very difficult to put the numbers. I always believe that market discounts a lot of things 6 months in advance or maybe 9 months in advance, whether with respect to the expectation that is getting built up on the outcome of political outcome and the expectation that is getting built up on economic growth coming back. Even in the case of the earnings starts picking up, that's always measured in the form of the P multiples. P multiples always discounts our price to book, always discounts well ahead of time with respect to the expectations. To the extent, I think the point what you are saying is right. I think pre-poll the market has been running quite well. There is then post that what is the event we can look for, and the market always look for something or other for them actually to get the direction right. And post elections, then we have budget to look for, and also the what do you call the direction which the government will I think roll out for the next 1 year or 2 year or 3 year with respect to getting back on the economic on the growth, and also the various projects that got stalled in the last 2 to 3 years for various reasons. If they are actually put into action, at least the beginning turns out to be good. I think from market point of view, I think the market will always look at what is the direction that is setting in and how I think they are going to be played out from the point of view of getting the expectations right, and also the expectation that has been built, how those expectations should be met with respect to the action that is coming from the government post formation. So these are some of the things which of course will play a role. From the market point of view, definitely yes, market does discount well ahead of times. Even the opinion poll of today is once again reiterate the confidence of investors to stay invested. Assuming there is some deviation, that is an expectation that comes in, it could potentially impact the market sentiment more in the short term. But as long as we are able to actually decide in terms of what is the direction which is coming in more with respect to the government formations, I am sure the market will start discounting that quite positively from the longer term point of view. I think we are at a stage what we even as a fund house keep discussing, are we actually looking for a short term run in the market, or we are looking at actually the longer term run in the market. The way we have panned out in the last 10 years or maybe the last 5 years and also the high potential that India offers, clearly I think probably we may get into the 3 to 4 years of bull market, but that will be subject to actually having a stable government at the center post election, which of course all of us keenly are waiting for.
Bala, it's a pleasure. Thanks very much. Short conversation today, but thanks for dropping by. A. Balasubramanian, CEO at Birla Sun Life, with his thoughts on the IT sector, broadly the market, and of course economy, sentiment, the big driver right now. Let's take a break. We are back in 2 minutes. You can catch that full play out of the opinion poll conducted by NDTV, Hansa Research for NDTV. When we come out of this quick break, Dr. Prannoy Roy with his full panel on the other side. Stay with us.